everyone, and welcome to the weekly recap that we do of the broader markets. Uh, would like to start with uh, giving you my best wishes for the Diwali season that's ongoing. I hope all of you are thoroughly enjoying. You will have to pardon me for a bit of background noise today, if at all it creeps in into this video, but I think Saturdays is the best time, in my opinion, to cover what has happened over the past week, and that just gives me a view of what I expect from the broader markets in the next week. So, if we look at uh, Nifty, it's again, please be aware that when the markets start correcting the way they are correcting right now, I think the correction is close to about 9%. When they start correcting like this, we always look at where was the last weekly pivot available where the market structure would shift, right? What is a market structure? Market structure is two highs and a low in between them. When it breaks that, the market structure shifts from one stance to the other stance, whichever is the opposite stance right now. So we are in a bullish structure, and when this will break and close below it on a weekly basis, this will be a market structure shift. Now, again, this is a concept that I have learned from the inner circle trader. He explains it way better than I do, but broadly, this is my understanding of what the concept is all about. So, do credit to inner circle trader for this, for the original concept and the original wordings of it. So, if this breaks and there is a close below it on a weekly basis, then I would consider the market structure to shift to weekly on a bearish note. But right now, if you already see, if I go down to daily, if you see these two highs, right, these two highs, and the low has been taken out here with this candle that you see, this has closed below it. So on the daily, I'm anyway already bearish, right? That's why what I have started doing in the background is start going through the stocks that are relatively stronger than Nifty, but still fundamentally strong, right? So on a weekly basis, we are still untouched in terms of the bullishness of the structure. We are very, very bullish. There's no doubt about that. Nevertheless, but so we are well above 200 DMA. There's no doubt about that. If we go to Bank Nifty, the structure is still intact on the weekly basis. Like I said, again, we are bearish on the daily time frame, which means it is correcting on the daily time frame, keeping in view that the weekly is bullish, right? That's an important note to understand. CNX Finance is still bullish. Auto has turned into weekly bearish. Can you see? The market structure here has now broken, and we've gone and we've closed below that. Now, what would bring it back to bullish? We'll discuss shortly on that. But Nifty Auto, 100% as a sector, is bearish. CNX PSC is bearish. Can you see? This was the structure low. It was broken and closed below it. Metals is still bullish, although very weak, but still bullish. Realty is still bullish on the charts. Energy is gone into a bearish structure now. Can you see the close below it? And it is just retracing back to one of these locations. PSU units, I think this was this I covered last week itself. This was bearish when it closed here. It is bouncing back, so let's see. We'll have to wait for a while. I don't see this bounce to really sustain. If it has to show me some amount of bullishness, it will have to go above this high. If we go to CNX Infra, 100% bearish on CNX Infra. CNX FMCG, definitely bearish. CNX IT, we are bullish. Can you see the charts are still very well intact, well above this low. CNX Pharma, no doubt the only sector that's truly holding up against the fall of Nifty right now is CNX Pharma. So broadly, if you see the broader market, Nifty is still bullish. We can look at Nifty 500 also, which is slightly a broader sector, CNX 500. If you see the market structure low is between these two highs, it's here, it has just touched it, has not closed below that, so I'm not very confident to call it bearish. This has happened a lot of times. It touches below, it does not close below that, and bounces back, goes through the previous highs. You will see occasions of that a lot of times. Can you see here? This is one of such locations. It goes below that, does not close, and bounces back altogether. It goes below it, does not close, bounces back altogether. And these kinds of stop raids, these kinds of fear runs will always be there, irrespective of which sector you are in and which year you are investing in. This is always going to happen. These whipsaws will always be there. So if you see broadly, most of the high beta sectors are going into bearishness on a weekly time frame. That is slightly worrying. The last time it had happened was not very close. It had happened once here in June 2022, but immediately it bounced back from there to break this high, right? And that's where it came back in the structure of bullish. So when these structures are becoming bearish, it does not mean that we start liquidating our positions. It does not mean that we go into the state of fear. It is very easy to check the market breadth of where the broader markets are. The very easy way to look at it is from the universe of stocks that are listed. I think there are about 4,800 odd stocks that are there in the market right now, publicly listed. Just go and look at how many stocks out of those are trading above the 200 DMA. That will give the confidence that is the market breadth bullish or is it bearish. If you see that count to be 70%, 60% stocks trading well below 200 DMA, that is a sign of a bearish market. But let's take a look at very simple. If you go to Screener, Screener is my favorite tool. Again, no endorsements, but it just works out well. If I see anything that is a market capitalization of more than 0.1, which broadly gives me a list of 4795 companies, and when I add the condition of the current price being greater than 200 DMA, the list of stocks that comes out is around 3000. So if you see 3000 divided by close to 4800 odd stocks, we are well above 50% structure. We are at about 60% of the stocks, in rather not even 60, maybe even 70% of the stocks that are well above the 200 DMA. That gives us the confidence that the market breadth has not deteriorated over the time, right? So going back to the charts, it's important to note the weekly depth points. If the market hits this is one of my personal favorite times to invest a good amount of money, to allocate good amount of money. Again, please do not do it blindly. Use tools like Screener, as I've already shown you. This is a tracker that I have about 189 companies. I do not like anything that is beyond the debt to equity of 0.5. I do not like that is not really trading closer to the all-time highs. It's just preferred for me to have those because I believe those are relatively relatively strengthening stocks as compared to Nifty. So the logic behind that is, when Nifty is falling 9%, and if a stock that I select is falling only 1%, that means it is holding something up. And when Nifty recovers 4%, the same stock goes 10% and beats Nifty, right? So that's the ideology behind it. Now, this ideology comes from two great investors, which is Peter Lynch and William O'Neill. It's a kind of a combo of both of them, which I find best fit for me, right? And the third thing I do is I do not invest in any of the stocks that are only BSC listed. They are just very volatile, and uh, it's not something that I'm truly interested in. Barring that, we have very important events coming up. So always make sure that you are always looking at the economic calendar. I'll only look at the high impact news drivers. If you see, we have a presidential election in the states on 5th of November. It is followed by 8th of November, Friday, with a Fed interest rate decision. And then there are other general numbers that come out in the United States for those years. If we look at India, we do not have any big impact drivers at this point. The medium impact drivers are inflation rates are coming up on November 12th, and there is a balance of trade, again is not very big impact. So the only one big impacting is inflation rate YY. In low impact, we have many others, but I think I think broadly inflation rates will is what will define. Uh, so that's about it. I think it will be important to see how the markets pan out in the near term. Weekly will be a go-to time frame if at all investments are to be thought of. Uh, as I've clearly said, I see uh, auto to be in a troublesome area right now, the PSE sector to be in a troublesome area, uh, and I think even to a certain extent, energy also seems to be in a problematic area as of now. So let's see. I think it's all driven with news, and will all be driven with time. So as I have progressed, if the Nifty falls 20% from here, I think I would be the happiest because I'm one of them who missed out on 2017 corrections, 2020 corrections. I was only able to capitalize with very little capital that I had and very little study around it. So this correction is a blessing for me in terms of getting a good price on a few top stocks. Again, in all of this analysis, I do want to, I do want to focus on the fact that I do not invest in a stock just because it is at an all-time high. That's not the broadest sense. I invest in a stock which is fundamentally strong, which is making returns for their equity shareholders, which is having enough free cash flow, which is having low debt. So I'm looking at all the fundamentals before I invest a penny into it. So it's not blindly look at any stock that's at an all-time high and keep investing in it. We have to choose and we have to hold on to it for a slightly longer horizon, and it will play its volatility. It will sometimes be 5% down, 6% down, uh, could even go to 10% down. Unless, like I've said, unless there is a fraud in the company that comes out, there is an audit report, there is a regulatory action in which the company gets stuck, then there's not much that we can do as equity investors on the outside, especially as minority equity investors who are outside the system. But the chance of it is 1 out of 30 companies you hold, 1 out of 50 companies you hold, right? So that's broadly what I wanted to cover today. It is a good opportunity. 9% is great, 15% is fantastic, 20% is would be truly awesome. So until I see you next time, keep tracking, keep a watch for the best available stocks in terms of relative strength, and don't be afraid to bet on something that you find good fundamentally. Until I see you next time, I wish you good luck and good investing. Bye bye.